Good evening. This is the Elliott wave update for the NASDAQ 100 for Tuesday, November 30th, 2021. Market continues to throw curveballs and be somewhat confusing, particularly here in the NASDAQ, as we continue to develop and move lower within the context of this new corrective phase. And it's a larger corrective phase at that. To update the picture, I have now put into place the completion point for the minute wave 2, and that would have been at yesterday's 16,441 high. Off of that level, the market did begin to drop. And then as we opened today at these lower levels, the market kind of hesitated pretty much all during the globex session, right in this box right in here. And then we opened and it just started to shoot higher. And again, reaching all the way back up to 16,442.5. And then Jerome Powell came out and started speaking. He is the Fed chair, and the market reversed very strongly. In fact, it went from 16,442 all the way down to 16,068, 16,068, 69, we'll call it. That was a pretty steep drop. And that took about 2 hours, an hour and a half, excuse me, about an hour and a half. And then I'm off that level. We put in a very, very solid bounce. Now, what also continues to happen, particularly in the NASDAQ stocks, and I was reading today that they're now being termed whales, and that's like larger trading firms, larger traders, hedge funds, et cetera, are moving into some of the tightened NASDAQ stocks and really pushing it higher via the options trades. And today it was Apple's turn. Apple closed up $5 during the regular session. And that's with the Dow being down 652 points. The NASDAQ in itself, prior to this closing push, was down 252 points. And all the other component stocks were pretty much in negative territory, except Apple. Then the bell rang, and Apple ran another $1. And that was after the bell. And that has produced a very, very strong rally, which actually is still in force right now. They're still coming in, and they're still buying the stock, and it's up $1 from where it closed about an hour ago. So what does that mean for our count? It is producing a very clean ABC up. Now, how high this ABC wants to get? Well, we have the 50-day moving average at 16,265. Then we do have resistance at 92, I think that is going to be. And then we have the 200 at 16,300. I would hope that that contains it. But the NASDAQ, as we get closer to Friday, I think is just going to see a lot of push and pull as the options come up for expiration. These are all tending to be, all of these types of moves are being done within the time frame of the weekly options expiration cycles. So they kind of get picked, and then they pick a point and they just lock in and buy those options. And in fact, I will show you just very quickly, because I think it's real important to kind of see this, understand how many options are trading that's pushing this. These expire in 3 days. Here's the at the monies, the 165s, which are now in the money, 522,873 times 100, because each one, it represents 100 shares of stock. Each contract represents 100 shares of stock. That's how much stock traded today, just in those options. Then if we keep going up, the 67.5s are almost 282,000, almost 283, et cetera, et cetera. And you can see they're now pushing on the 170s. Why not? We are up 5 today. Could we be up 5 between now and Friday? Sure. That's 117,000. You see them starting to bail on the puts. It just continues to add pressure to the underlying stock. And that is likely to continue. So very high volume. The stock itself, I believe, let's just take a peek, 173,544,000 shares of Apple traded. That's extraordinary. That is extraordinary for Apple in a single day. Apple normally, it can put in 30, 40 million shares a day, 50 million shares, 173.5 million shares traded in Apple today. That's quite extraordinary. Back at the ranch, we're all trying to figure out what's the next move for the NASDAQ 100. I do believe that the correction is still in force. I don't believe that the market is going to really just break here and just flood and go higher. Now, it could. Never say never, not in the NASDAQ, because stranger things have happened. But I do think that the market will continue to move lower as bits and pieces of negative news or negative implication news begins to continue to flood into the market. Today, it was Fed Chair Jerome Powell. What it might be tomorrow, who knows? Don't forget, off in the background, although nobody believes it can happen, Congress is now having to deal with their extension to keep the government running runs out in about a week. So we've got that. So all of those negotiations, how we want to wrangle, how the politicians want to twist and turn that is going to have an effect on the market, because government shutdown is not a good thing, period. Not a good thing. We have the variant in the COVID, the new COVID variant, which now more information is coming out. And from what I could read in my own local newspaper, which is the San Francisco Chronicle, it's just a matter of days that before it's announced that it's in the Bay Area of where I live. And if it's in the Bay Area, then it's in the United States, and then it's all over the United States. So this is how quickly this can be spreading. We're an international, global community. People are moving around, getting on planes and going all over the world. And so this is just moving around with them. So many unknown factors still remain. So all of the pushing and pulling and everything that we see going on, you have to wonder why and what the plan, the game plan is here, and how we're going to end up for year end, because we also have that. So here we are steaming forward in this bullish euphoria that nothing can stop us, and getting caught in a downdraft, buying it right back up, getting caught in another downdraft, et cetera, et cetera. So I'm not sure, because on top of all that, we have the status quo going in that the market still has to work through the year end. We're going to have a Santa rally. We're going to have this. We got the year end. We got the markups. We got this, et cetera, et cetera. We got through Black Friday. We got through Cyber Monday. And now we're kind of just trying to see, well, how's that all going to work out? How's that going to affect retail sales? How were these sales? They're already coming out saying that, for Amazon, probably not as strong. Supply chain worries really affected Apple's ability, so et cetera, et cetera. So it's like you start to wonder, why are we buying? Why are we just still hanging on to something that may not come in? I don't know. But my Elliott account continues to tell me that we are headed lower. So I'm thinking that what we've got going on here is that we likely might be done with this ABC up. And even if I move this 2 and put it over here and consider this all done now, and even if this was only A and that was B and this is the C, I can do that. I would accept that. I could put the 2 here, and this market that was wave 1 of 3, wave 2 of 3, and we're off and getting dumped. If not, 1 of 3, 2 of 3, 1 of 3 of 3, 2 of 3 of 3. So either way, either count, my look at this market is telling me that we're likely still going to fall off a cliff, similar to what we did today. But it'll be even in a better position because it'll be in a bigger position and it can seriously just get caught up and drop. Now, what is the extent of this third wave? Because don't forget, this is really where the minor third started. We're just within the minute third of this whole game plan here. So I definitely feel that we're for sure going to come down and break 15,983, which is just below the low there at 988. That I think gets broken. 931 could provide a pause, but then we start heading down to here. Our first stronger support, which is where minor 3, this whole thing, would be equal to minor 1 at 15,792, we'll call it. I don't think that contains it. This is a third wave. A third should not equal the first. It should come in at much greater. So my first thought is that 1.618, that minor 3 will equal minor 1 will equal 1.618 times the length of minor 1 at 15,389 or 15,390. And it could still take us even deeper and bring us back down towards 15,000. There are numbers that this can keep going. Now, the intermediate level can bring us all the way down to here, 14,363. So we're still just working through these, the minute and the minor levels. We still have to deal with the intermediate levels as they begin to unfold in this much larger corrective phase. I'm taking it in bits and pieces because we're in here trading every day. For tomorrow, I can't really put a limitation on the upside, although I'd love to, and I'm going to call it. It's got resistance at 16,256 up to 16,300. That should contain it. Turn the market lower yet again. We still have overnight, so globex, we don't know what they're going to do. Again, this stronger decline kind of got its kickoff in the Asian markets globex session, and then the European globex just kind of held it in place, waiting for us to open and do something silly like we did. And then nosedive. Now, so it could go up during globex. If it lasts and stays in this area until the US reopens tomorrow, I still would suspect that we're going to start to slide and come down. And again, we should see stronger acceleration. This, if anything, was just the first wave. So we still have a 3, which is going to make that look like child's play, if all plays out accordingly. So I'm looking for lower levels tomorrow. Here are the support zones, the support levels. Now, I think they will provide a pause and maybe a bounce, particularly down here. I don't think this one will have much effect because it's been slid through several times. But we can get through that down here, which will likely give us a little bit greater pause, maybe another bounce, but then we start to slide again. Stronger, 7, like 791 up to 800. We're talking 300 points from where we are, we could drop. Could it happen? Of course. We were down 300 today at one point. Why couldn't we do it again tomorrow? All things are possible. Ultimately, again, these levels is what I'm looking for. So we need to continue to trade smart. We need to continue and stay in the now. It can be really difficult with distractions and everything else that can kind of come into our trading day or into our trading space. If it takes you out of the now, a lot of things can happen, and distraction can really create havoc in a trade. Trade smart. Do not be married to a downside. Do not be married to an upside. Both are going to happen. The volatility obviously has picked up 2-fold to 10-fold over what we normally would see during a day. And that makes the moves both to the upside and the downside extremely tradable, but you got to stay on your toes and not get married to one or the other and play everything that gets presented. They are tradable. They are money makers as well. Don't sit in a bad position. Try to close it. If you realize, oh, not going to go where I want it to go right now, close the position, take another look. Your next trade might be re-entering the same direction, the same trade, but you're not going to be worried about, oh, my P&L, or what's happening to the trade. You're going to be able to go along with the trade. So there are times during the trading day where it's like, even I'll enter a trade and I'm early. I didn't think I was, but I'm early. And the market doesn't go in my direction. And I need to pay attention because suddenly it's 100, 200, 300, 400, because the volatility in the NASDAQ's increased. So you're suddenly down. And then you're going to add to the position because you got to try to do some averaging in here. If you're going to continue trying to hold it, you're just compounding your own problem. It's much easier just to get out of the trade, take another look, see what's going on, because your next trade might be to go in the direction the market's going. And then ride it up. Why give the money? Take the money. Okay, enough said. Use the moving averages. They really, really, really do guide the trades. They do kind of set the stage for what we can expect when we start to see things break down. Again, quick review of the daily, because that's where the action was today in terms of moving averages. Here we are at the 20. We came down and we broke that 20, and look what they did. They had to make sure they took it back, and they took it back in grand style, and they did it in Apple. We're not the only ones that know that. It's like, if this daily chart would have closed below that 20, because it did trade down below it, it broke below it, but they took it back and then some. Now, on a technical basis, if it had closed down below here, that's major weakness being shown on a daily chart. Powers that be saw that and thought, can't have it. And they bought it. And they did it all in one stock, at least for the NASDAQ. So stay on your toes, play with moving averages, use the Fibonacci, both sides, resistance and support. Use the Elliott so that you can try to figure out what's coming next. Have a great trading day tomorrow. The next update will be Wednesday, December 1st.